Hi, I'm Phil Grandy of philsgang.com. Welcome to my YouTube channel and Phil's Radio Show podcast. Today is December 23rd. I'm going to explain to you why everyone is wrong when they're telling you, especially the fake Biz News Network, that the stock market is not going to drop below the October 13 low, which they're saying is the bottom. It's not a bottom. Here's why. Look over here quickly. In 2008, when the market crashed, we lost $10 trillion in equity between house equity and stock equity. Actually, the people who really got hurt were our owners, the very, very wealthy, because they control 85% of the stock market. And they have tremendous assets, okay? They all got hurt. They didn't want to take the time to build the stock market back up. What builds the stock market? Builds those prices back up. Earnings. You got to have good earnings. Well, it's going to be tough to have good earnings because they'd have to put billions of dollars, okay, into business investment, rebuild these companies to get these earnings. It would take years. They weren't going to accept that. They wanted earnings overnight. So they lied to us. And they came out and they said, hey, guess what we're going to do? We're going to do QE, and it's going to help Main Street because the very wealthy, they're going to get wealthier, but that's okay because they're going to take all that money they're making and it's going to go down to Main Street and you're going to get very, very wealthy. Here's what they did. That was a bold-faced lie. What makes a stock go up? Here's a stock that's at $35. Let's say this company X has 500 shares totally and the stock's worth $35. What pushes up a stock price is earnings per share. So earnings pushes up the stock price. So they didn't have any earnings. So how are they going to get them to push the stock price up? Because companies were destroyed. Well, here's what they would do. A little trick called QE. They would go out and they'd print all this money, the Federal Reserve, and they'd buy treasuries to drop interest rates to zero. They would give the money to the CEO at zero, and then he'd go and buy a stock. And when he bought a stock, he would buy 500 shares, drop it to 400 shares now, move the 100 shares over here. What happens when you have less shares? Your earnings go up, that pushes your stock price. But your earnings are going up without profits. That's right, they go up without profits. So then they print more money, give it to him, he comes back, and now all of a sudden he moves another 100 shares over. Now his stock goes from 35 to 65, 65 to 75. He does it again, reduces the amount of shares. And remember, he's keeping borrowing and borrowing all this money at interest rates that are zero. So that's how this stock got from $35 up to $235, what they called unearned increment. They really didn't do anything. All they kept doing is reducing the amount of overall shares, take them off the market so there's less shares to trade. That would mean that would push up earnings artificially, that push up stock prices artificially. And after 13 years, my God, the stock was at 235. Now let's continue. So the stock market continued to rally until something happened. All of a sudden, in 2018, the market dropped. In 2018, we had that first drop. That's the one I predicted. Okay, and when that dropped down in 16 weeks, it was no problem. They rallied it right back up, 54%. Wow, no problem. Now all of a sudden, we got another drop, 2020. In 5 weeks, dropped down 31%, no problem. Rallied up 133%. Now, this stock market dropped down in 47 weeks. And every time they tried to rally it, look over here, every time they tried to rally, it failed. They tried to rally, it failed. Tried to rally, it failed. And here it is now, and it's going to fail and take out that low because look over here. That stock that went from $35 up to $235, remember, as they were playing that game, they had to start fighting inflation. And remember, they stopped, appeared, no more QE. QE stopped right here on this chart. QE stopped, remember? In November 2021, this game was over. No more QE, no more zero rates. Rates went up. And what happens when you have rates going up? When you have rates going up, that hurts. That's higher inflation. That hurts companies. So the stock that's at $235, which is only worth $35, is going to come back down. And that's exactly why they're going to take out the October low. That's why they lied to you and said, oh, there's no inflation, it's transitory. That's why they've been lying, because they don't want you to know this fact. And that's why they're telling you the October low isn't. No, it's not. That's what they've been doing for 13 years. The gig is up, inflation's too high, and they got to fight that inflation. It's going to destroy these stocks and bring that $235 stock back to 35. The game's over. I hope that helps you. The only answer is not to run and buy some defensive stock. Don't go buy Campbell's Soup. No. You got to learn how to sell short. Join my gang, philsgang.com, and we'll show you how to do that. Hey, we'll see you on the charts. Have a great holiday.